Welcome back. The Reserve Bank has outlined its near-term monetary policy path, projecting improved growth from 0.9 to 1.2%. This after announcing a hold in the interest rate at 7%. Business anchor Tumisang Ndlovu speaks to us about the outlook. Tumisang, give us, of course, the details and the holistic picture painted by the Reserve Bank today.
Thanks once again, Veronica, and good evening. So the holistic picture really is improved growth that the South African Reserve Bank is expecting and a continued ease in inflation. What that means is a little bit of good news, particularly in the near term, where there is a slight possibility of future interest rate cuts after the Reserve Bank's Monetary Policy Committee this time decided to leave the interest rate unchanged at 7%. Rather. I am joined for more reaction now by Imvelo Solutions, Wealth Solutions, Palesa Tlholoe, to speak more about really what this means for South African consumers. Palesa, good evening. Not the kind of good news we would have expected, but at least slightly better. A hold is not necessarily a bad thing. How should this translate to the South African consumer?
Good evening, Tumisang. Good evening to your listeners too. This is actually not a bad outcome at all, Tumisang. If you think about it, it could have been worse. You know, consumers could have been slashed with the higher interest rates. Instead, now we're remaining unchanged. What that means for a South African consumer is that if you had not tightened your belt, if you are still paying high interest-bearing loans, if you don't have enough cash flow within your expenditure, then this gives you an opportunity to start looking at those. And importantly, Tumisang, is that if, for instance, you have a loan where you're paying very high interest rates, you can then look at debt strategies or debt management strategies, some of which would include something like debt optimization, debt consolidation, wherein you look for those debts that you have, that you are paying high interest rates on, and you move them towards those where you would be paying lower interest rates and basically refinance them. So in a situation of debt optimization, you would actually refinance your debt, while in the situation of debt consolidation, you would actually just move all your debts into one facility, but you would have to pick that facility and make sure that that facility is the one where you are paying a lower interest rate. But most importantly, Tumisang, is that continue to pay off your debts and continue to pay those interest rates. Do not reduce just now just because you're having this bit of a break, because we don't know what's going to happen within the near future.
And that's valuable, Palesa, especially because we may, as South African consumers, think, with relief, I have a little bit more to spend. Are we seeing a trend in this country, given the trajectory of the economic activity and the landscape as it is, South African consumers taking such advice and heeding the issue around paying debt, but at the same time using the available vehicles to do so efficiently?
Look, Tumisang, we do know what our situation is like. We know that our growth rates are very low at the moment in South Africa. We are hoping for things to improve. We know that inflation is also not always on our side, even though the Reserve Bank and the other regulators are trying to keep a tight look at that. So we know that South African consumers are not in a very good space. I mean, unemployment rates are still very high. At the same time, what's important then for South African consumers is to look for opportunities, to find opportunities within their existing environments, and some of which would be, how do you as a consumer unlock cash flow within your own pocket? How do you make sure that you are ready for in case of emergencies? Because more often than not, why we find ourselves in situations where we have high debts is because we're not ready for emergencies that we know they're going to happen. And so if we ensure that we always have an emergency fund that is waiting in case something happens, then at least that will give us some relief. Importantly, though, when it comes to emergency fund, is that it's difficult to create an emergency fund if your expenses are already higher than your income. And so the important thing is, do consult a professional. Do find ways to review your current expenditures. Talk to a professional that will assist you to do that. And hopefully within that entire process of reviewing your expenditure, then you can find loopholes. You can find areas in which you can reduce your expenditure and ultimately reduce your debt, but always have something on the side, because that what you have on the side is what will allow you to not find yourself always having to go and borrow money. Because the problem with debt is that you keep borrowing from Peter to pay Paul, and that's why we never really move forward. We're living from paycheck to paycheck. That's why we're not really moving forward. The idea is unlock cash flow within your portfolio of whatever financial portfolio you have, and unlock cash flow so that you don't have to always borrow when things get tough, because things may still get tough as we move forward.
Based on that, what advice would you have for South African consumers with this little bit of hope that maybe by the end of this year, early next year, we'll start seeing another rate cutting cycle? What would you say to somebody in a sense of hang 10, particularly, younger entrants within the economic landscape in this country? They may see that the interest rates are slightly better, and possibly this is a chance to get into either the property market or buy a fancy new car. What do you say to individuals such as those?
Look, everything is always relative to each person, and we can't just take a blanket approach and just apply to everyone. And so once again, I'll just start by saying it's important to consult a professional and see if that makes sense for you as an individual, because yes, interest rates may not be going high, but you've got other things that are going on the side. And so my suggestion to young people, it's important to consult. The purpose of consulting is to really unpack your finances. Look at what are you earning versus what are you spending. It's also important to always we all get excited, but do we budget and ensure that we fund for those exciting things that are happening in our lives, or the excitement that we want to experience within our lives? And so it's important to always have a budget that will take care of all these things, whether it's a need or it's a want or it's your investments. It's important to have that. You can still go and buy property. It may be a good thing to start buying property now. It depends, as I said, from person to person. But again, it's important to shop around for interest rates. You don't just go for the next one. Yes, the Reserve Bank is keeping the interest rates unchanged. However, we don't know what the interest rate is like at one bank versus the other. So shop around, ensure that you get the best out of all of those. But also, the consulting of professional also helps you to look for other things that you may be forgetting, you may not be noticing. Because if you, for instance, you're going to be buying a property or you're going to be buying a car, it's not just about that repayment that you are making. There's other costs that you need to take into account. So for instance, for a house, when you buy a house, you're going to have money to pay lawyers. Once that house is there, there's rates and taxes. Are those all factored within your monthly expenditures? Because guess what? That's what will throw you off once you have this property, where you find yourself, yes, you're able to pay it. And perhaps, let's say you have bought a property for investment purposes, and you've got a rental in that property. You've got someone who's renting it and paying it. However, more often than not, the rentals are not enough to cover all the costs. And so you still need to bleed out of your pocket to pay for the rates, to pay for levies and things like that. Have you taken that into account when you look at your budget? And so it's all those things that you need to take into account, and it's those small things that keep throwing us off as consumers that makes us find ourselves in this debt trap where we just never get out. We keep running, but we're not really going anywhere. The main idea is find yourself where you are spending way less than what you are earning. You are paying for your repayments are towards assets that are building for your future wealth. They are going to give you something in the future. And ultimately, in the end, you want to have financial freedom. You want to find yourself in a position where you don't owe everyone around you, and you have assets that you can leverage off when you need to grow your own wealth, and that you basically are doing what you want and you own your time. Very importantly, to own your time.
Absolutely. Thank you so much for that advice, Palesa Tlholoe of Imvelo Wealth Solutions. They're talking to us about how South African consumers can navigate a lower interest rate environment, of course, in reaction to the South African Reserve Bank earlier today announcing that the repo rate will remain at 7%, at least for now. That's how we wrap it up on the business desk this evening from the streets, as you can see, and we take you to the markets. Unfortunately, it is a negative close on the JSE, the All Share Index having lost 0.06% on the day.